Hey everyone, welcome to the XRP market analysis for April 26, 2026. You know what I've noticed? Today's data is showing some really interesting patterns that I think you'll want to hear about. Let's dive right in, shall we? Oh, before we start, this video is based on an AI-generated report, so please use it as reference only. And remember, investing is always your own responsibility. I'm just someone looking at the data with you, so let's start with where XRP is right now. The current price is sitting at $1.4228, and it's down about 0.73% in the past 24 hours. Now, this is interesting. We're seeing 26.4 million XRP in trading volume, which shows there's still plenty of activity happening. The asset is kind of consolidating near the middle of its price range, basically searching for which direction it wants to go next. Here's the thing about the technical indicators. They're telling us a pretty balanced story right now. The RSI is at 57.33, which means we're in that neutral zone. Not too hot, not too cold. The MACD is at 0.0177, sitting above its signal line. And that histogram of 0.0064 is actually suggesting some upward momentum building up. XRP is trading above the middle Bollinger Band at $1.3891, with room to move up toward $1.4793. But here's what worries me a bit. We're still 22% below that 200-day moving average at $1.8393. That long-term downtrend is still hanging around. Now, let's talk about what's happening in the bigger world. President Trump just canceled those US-Iran negotiations, and wow, that sent Bitcoin tumbling from $78,000 down to $77,200. You know what's actually good news for XRP though? It has a really low correlation with Bitcoin, only 0.0508. So when Bitcoin has these dramatic moves, XRP doesn't necessarily follow along. It's also showing negative correlations with traditional markets, which can be both good and bad depending on what's happening out there. The regulatory environment. Well, it's been eventful. The US Treasury just froze $344 million worth of Iranian crypto assets. That's a big deal, because it shows how much power regulators have when they decide to act. There's also this fraud investigation happening, with a Polish exchange involving $97 million. These things don't directly affect XRP, but they do remind us that the regulatory landscape is still pretty active. Here's where things get interesting with market sentiment. The Fear and Greed Index is at 31, which puts us firmly in fear territory. XRP search trends are at just 25. That's really low. You know what I've noticed? When interest is this low, it often means there's room for a big surprise to the upside when attention comes back. The FOMO spread is at 0.0, so we're not seeing any crazy buying frenzies right now. Now this is where it gets really exciting. The on-chain data is showing some massive whale activity. We had 917 whale transactions totaling over 5.7 trillion XRP. That's huge. Plus, 34.94 million XRP was withdrawn from exchanges on April 24th, the sixth largest single-day outflow of 2026. When whales are moving coins off exchanges into private wallets, that usually means they're planning to hold for the long term. The Elliott wave analysis is showing us in wave C of a correction, which is typically the final declining phase. The Wyckoff analysis suggests we're in an accumulation phase, stage A, though with only 33% confidence. Here's the thing. Early accumulation phases are when smart money starts buying at lower prices. That whale activity we just talked about? It fits perfectly with this theory. Okay, here come the AI predictions, and they're quite something. Short term, the AI is predicting $1.1998. That's about a 15.6% drop with an 84.6% probability. But wait, the medium-term prediction for 7 days out is $1.6366, which would be a 15% increase. And the 30-day prediction? $1.7089. That's over 20% higher than today. So we're looking at a potential V-shaped recovery pattern here. Now, let's be honest about the risks. The geopolitical tensions from those Iran negotiations could keep markets nervous. Regulatory uncertainty is still hanging around after that Treasury action. We're still way below that 200-day moving average, and market sentiment is pretty fearful right now. Plus, that AI prediction for the short term. 84.6% chance of going down to $1.20 is something we need to take seriously. So here's my overall take. Watch and accumulate on dips. The whale accumulation, the AI's V-pattern prediction, and those super low interest levels all point to potential opportunity. Here's what I'm thinking for strategy. First entry around $1.35. Second entry near that AI predicted $1.20 bottom. I'd set a stop loss at $1.10 if we break below the accumulation zone. For targets? First target at $1.65 based on that medium-term AI prediction, and second target at $1.85 where we'd recover that 200-day moving average. Don't put all your eggs in one basket though. And that's it for today's analysis. If this was helpful, please subscribe and hit that like button. The data is showing some really interesting patterns right now, so definitely stay tuned for updates. See you next time, and remember, always do your own research.